Welcome students. So in today's class we shall be learning about the balance sheet. So what is a balance sheet, why it is prepared and what is the importance of a balance sheet. So now first of all let us see what is a balance sheet. A balance sheet is a statement of accounts prepared for the purpose of ascertaining the exact financial position. So students, remember always that it shows the exact financial position of a company when that is on the last date of financial year under review. So it is called as a balance sheet because it is prepared on the sheet of ledger folio. So it is generally prepared on sheet of ledger folio. So the assets are usually recorded on the credit side. Here you can see the assets are usually recorded on the credit side, whereas the liabilities, they are recorded on the debit side of the balance sheet. So what are the uses of the balance sheet? Now balance sheet is prepared due to particular reasons and it has following uses. So the uses, number one is it provides the information as to the total amount of the money involved in running of a business enterprise. So it usually reflects the total amount of money that is involved in running of the business enterprise. Then comes the second point, it shows the financial state of the business firm as on a particular date. So it usually reflects the financial state of a business, what is the position of the business at a particular date. Then the third point is it gives the information regarding the nature and cost of assets of the firm. So what kind of assets, what are their cost in the firm, and similarly the fourth point will be for the nature and cost of the liabilities. So these are the four important uses of the balance sheet, we can say. So the preparation of the balance sheet. So how a balance sheet is generally prepared. So in a balance sheet are the given names of all those accounts which have balances, that is the accounts of assets, liabilities, owner's equity, while the accounts of capital and liabilities are shown on the left side, that is in case of the debits, and the assets and the other debit balances are given on the right hand side of the assets or the credits. So items that are generally included in the balance sheet are, number one, the current assets. So these are those which are either in the form of cash or that can be easily converted into cash. So it is the most liquid money in hand, we can say. For example, the cash at the bank, the bills, the stocks, then the debtors, the securities, short term basically. So these are the current assets. Then comes the fixed assets. So these are the assets that are held on a long term basis in the business, such as the land, machinery, building, furniture, and these are usually known as fixed assets. Then comes the current liabilities. So what are the current liabilities? So they are expected to be cleared within a year basically, and these are known as the current liabilities. They are usually paid out of the current assets only. For example, we can say the salaries, wages, commissions, bank overdrafts, rent, taxes, the bills that are payable, these are all the current liabilities. Then comes the fourth point, that is the long term liabilities. So those liabilities which mature for payment after a period of 1 year or more. So they usually mature after a period of 1 year or more. So they generally include the loans which are repayable after a period of more than 1 year, the long term loans. Then the mortgages on the estate holding of the business. So the mortgage values on the estates. The fifth point is the investments. So they represent the funds invested in the government securities and the shares of the companies. So these are shown at the cost price in the balance sheet. Why so? So if on a date of preparation of the balance sheet, the market price of an investment is lower than that of its cost price. So no doubt this fact is brought by a special note in the balance sheet, but they are always recorded on the cost price only. Then comes the capital. So, the excess of the firm's assets over liabilities is known as capital. So, it is always an assets, the value of assets is more than that of the liabilities. It represents the amount originally invested by the proprietor or the partners and is increased by the profit, but decreased by the loss or drawings. So, the seventh point is obviously the drawings. So, these are the sums of the money or goods withdrawn by the owner or the proprietor from the business for his personal use. So, drawings by the proprietor has the effect of reducing the balance in the capital account only. So, they have the effects on capital account only. Therefore, the drawing account is closed by transferring its balance to the capital account. So, it is not written separately, but the capital account is generally affected. So, how the grouping and reordering of the assets is done? So, basically the items included in the balance sheet needs to be properly grouped and presented in a particular order. The term grouping means putting together items of similar nature under a common head. The assets and liabilities are shown in particular order. We all know that the left side is for liabilities and right side is for assets. So, it generally follows two methods. The first one is the order of liquidity. So, it means the order in which they can be converted into cash. Simply, for example, the most liquid item is the cash in hand, whereas the least liquid asset is the goodwill of the company that is shown at the end. So, these are for the assets, but in case of the liabilities, the order of urgency is generally followed. So, similarly, the liabilities of the business are arranged in order of urgency of their repayments. For example, the one with the most urgent regarding the repayment, such as the short term creditors, are shown first, whereas the least urgent, the long term creditors, are shown at the end. So, this was regarding the order of liquidity. Students, the second method that is generally followed is the order of permanence. So, this method is exactly the reverse of the first method. And according to this, the permanent assets and liabilities are shown first, followed by the current assets and liabilities. So, students, the business enterprises which are run by the sole proprietor or by the group of partners, they generally follow the order of liquidity. You can see here they generally follow the order of liquidity. The sole proprietors or the partnership firms, they follow the order of liquidity method for preparation of the balance sheet. Whereas, the large companies such as the joint stock companies, they follows the method of order of permanence in order to prepare the balance sheet. So, now I will be showing you an illustration of the balance sheet, how a balance sheet looks like. So, here you can see the balance sheet. It is containing two sides, the debit and the credit. The left side is debit, this is for liabilities of the firm, whereas the right side credit, it is for the assets of the firm. So, under the liabilities, we are having the current liabilities, fixed, the long term liabilities, such as the bank overdraft. Let us say it is for 60,000 rupees. Then it includes the creditors, for example, say 25,000. Then the capital invested is 90,000. The net profit that is earned is of 45,000, and hence the value becomes 1,35,000 in the capital account. Whereas, the owner of the company withdraws a sum of, we can say 10,000, and the net balance is reflected as 1,25,000. So, the total amount on the liabilities comes out to be 2,10,000. Now, in case of assets, we can see that cash in hand is 2,000, the investments are of 6,000, the debtors are of 8,000, then the closing stock is for 48,000. The furniture cost around 10,000, the vehicles of 14,000, the machinery cost around 42,000, and lands and buildings near about 80,000. So, the total on the right side in the credit side is also 2,10,000. Hence, it validates the accuracy of the balance sheet being prepared. So, students, I hope now the balance sheet is clear to you. We have covered its definition, the uses, Then the preparation of the balance sheet, during the preparation what are to be mentioned? The current assets, fixed assets, current liabilities, long term liabilities, then comes the investment, the capital and the drawing. So, in order to prepare the balance sheet, two methods are followed. One is the order of liquidity, that is generally followed by the sole proprietor or the small scale business, the partnership firms. Then the order of permanence, that is usually followed by the joint stock companies or higher organizations. So, here is an illustration of balance sheet. So, I hope now the topic of balance sheet is clear to you all.